the world was watching what was happening in the Treasury market last week, there was some doubt cast over what was deemed as the world's safest asset. China holds $760 billion in U.S. government debt, being the second largest foreign holder after Japan. Do you think that China will embark on allowing some of this conflict to spill over into the financial market in the form of their retaliation?
I don't expect a fire sale by the Chinese government for the U.S. treasuries because the implication for their existing holding of U.S. treasuries could be very traumatic, and you are going to have a lot of unrealized market losses, and I don't think this is desirable for the Chinese government. But to diversify their foreign reserve holdings has been a long-term goal of the Chinese government, and actually we have seen over the past 10 years, I would say, especially in the recent years, there have been quite rapid diversification from the U.S. Treasury to other currencies as well as to the gold. And other than the U.S. government, in the overseas market, we do have a lot of financial institutions. The Chinese financial institutions, they do have a lot of dollar holdings, and I would expect these institutions to also gradually diversify away from the USD, assets. I think based on conversations with a lot of our clients, there is a growing concern of the dominance and the exceptionalism of USD assets, and a lot of clients are also thinking about perhaps this is time to gradually diversify outside the USD holding.
What about the CNY? Do you think that there will be a move to allow it to depreciate?
I think we are seeing this trend of depreciation against the U.S. dollar. Obviously, a weaker RMB is better for exports and to alleviate some of the pressure on the exporting sector. But we have to see over the past 5 years, RMB has actually already depreciated on a real exchange rate basis versus the major trading partner. So the marginal benefit of depreciation is actually not very substantial. And obviously, if the Chinese government use a devaluation as a retaliation tool, it will literally close the door of negotiation with the U.S. And if we look at the scale of fixing depreciation, it's still gradual and ordered. So I don't think we are going to see a one-time devaluation like back in 2015, but there will be continued and gradually depreciation against the major trading partners on a trade-weighted basis.
If it is biased to the weak side, do you think we could see 7.5 by the end of this year?
I would not rule out that possibility. It really depends on the negotiation path of U.S. and China and how U.S. is going to do with its allies about restricting some of the re-exporting from China and other related retaliatory measures from the two countries. I think I would not rule out the possibility of moving towards 7.5.
So China has ruled out that it's not going to be responding to any further tariff increases coming through from President Trump. How do you expect them to react?
I think there are many other non-tariff measures China could do. One of them is investigating the U.S. firms in the reasons of antitrust or market manipulation, and China has been using this in the past few episodes of trade war with the U.S. They could also do an export control of critical minerals. They could also place sanctions on U.S. personnel and firms and putting more U.S. companies into this unreliable entity list. There are still a lot of ways to do it and making it more difficult for U.S. firms to conduct business in China and strengthening the alliance with the other nations in the Asia and other emerging markets. So there are many measures to do. It really also depends on how U.S. is reacting at this point.
So you think retaliation is one of the methods, but what about support and stimulus? What is that going to look like?
We are actually hoping for more stimulus pushed out by the Chinese government. There was reported a meeting going to be conducted on Friday about another round of fiscal and monetary stimulus. As of now, it doesn't feel like they are going to immediately push it out. Perhaps they are also waiting for the outcome of initial negotiation with the U.S. But I think China has to push out not just fiscal and monetary stimulus, but a lot of the industrial policies to give more credit, to give more flexibility to the private sector to lift up the consumer sentiment and overall to boost this animal spirit within the economy. So there's a lot the government need to do to offset these headwinds coming from the exporting sector.